Thank you, everybody, for coming in and listening to RWA Tokenization, our panel today. I have not done moderations before, so bear with me if I'm not as fluent as you have seen Tracy go through the dialogues and conversations. But I'm very excited for this panel today because if you think about RWA tokenization, me, myself, as an ex-banker and a digital exchange and the blockchain provider company, as well as a custodian, right? We are pretty much everyone here that is needed to get the tokenization in place. So please feel free. I would like to leave the last 10 minutes for Q&A from the group. But I do feel that if this panel goes well, we can set up a tokenization effort soon after this discussion. So with that, I'd like to open up this wonderful group to very quickly introduce themselves, and then we go through the rounds.
Perfect, thank you. Hi everyone, Jürgen. Thanks for having me today. I'm Global Head of Strategic Partnerships at Taurus. For those of you that don't know Taurus, we are first and foremost a digital asset infrastructure provider when it comes to custody and tokenization, working predominantly with regulated financial institutions to enable them to tokenize anything in the RWA world or set up the wallet infrastructure. Thank you.
Yeah, hi everybody. I'm Björn. I work here at DFINITY. I'm a researcher for almost 2 years now and focus on tokenomics. For example, I worked on a platform that allows projects to decentralize their applications and then raise a token and raise fund at the same time, so that at the end you have like a decentralized autonomous organization controlling a dApp running on the internet computer. Yeah, before DFINITY, I worked in quant financing at big banks here in Switzerland, focusing on derivative modeling and stress testing. And during that time also, I worked together with Tanvi, so it's nice to see you again here. I still remember that time very well. So yeah, that's me. Thank you.
Hi, good morning, everybody. Matthias Müller, Chief Commercial Officer at BX Digital and also BX Swiss. We belong to Börse Stuttgart Group. We operate two exchanges. One is a traditional one, and one will be soon licensed, we hope, and operating in the digital space. Yeah, and I'm an ex-banker as well, but have been with exchanges for over 20 years now.
Thank you all. I mean, tokenization is a big topic. I think I'll be preaching to the core if I'll start discussing what tokenization is and how big the opportunity is. With BlackRock's announcement earlier this year, it has now become the next opportunity post ETFs, the whole reign of ETFs that followed the first half of the year with Ethereum going in, and now even looking at Solana's ETFs in play. When it comes to tokenization and BlackRock's announcement of making it a $5 trillion market by the end of 2030, we do understand that it brings in liquidity to otherwise very illiquid assets into the platform, and obviously a huge amount of efficiency in bringing a lot of these assets on chain. From your perspective, looking at all these advantages and benefits and having an amazing infrastructure, people being aware of this, and a need for liquid money in the overall ecosystem, what are the biggest hurdles? Why is it not big enough as it needs to be? Your thoughts?
Well, let's start there. I think when we initially looked at it, and as I said, we're working with a variety of financial institutions as well in the space. There's a couple of challenges they faced. Number one is get the right business case together, because sometimes you see an announcement and somebody else thinks, oh, I can do a copy paste. It just doesn't fit your core business. So then kind of like set up for a bit of a failure actually when it comes to that. Looking further down the line, I think a couple of things. Standardization is one of the big things when we look at it, because right now you can do many things on the tokenization side, but really where the efficiency gains comes in either on the capital side or also operational gains is the settlements of it. So I'll give you an example. Repos is one of those areas we've seen, especially in the US, which has been picking up a lot. There's a lot of institutions that actually put it on the blockchain and see the advantages there. Trillions of dollars are going via the platforms now that have been built up. And why is that? Well, also because you have the efficiency of the settlements. You look at the life cycles, and if you can automate it via smart contracts, that's, I think, where initially when tokenization come up and when everybody just looked on, can we build it out? What's the gain on the revenue side? Little bit the struggle, but if you look more rounded as to, okay, we have revenue contribution, we can extend the investor base, but we can also look on the capital efficiency gains and the operational savings that comes. That's kind of like we're a little bit more, we see now picking up from instruments. What we have seen, money market funds is one, mutual funds, and then also shifting into tokenization of deposits, collateral management, everything that which is core to the banking side as well, where I think and you always have to present it to your senior management as well and sell it internally as well for large institutions. That's kind of like, I think where more and more traction is coming now. Lastly, and then I hand over as well, is the challenge is also looking at it holistically, because we can speak to the buy side. They want to tokenize money market funds or mutual funds. But then what happens to the custodial side? Some of the really large custody banks in the world are yet not ready. They don't have solutions. Buy side would love to use them, because what they don't want to do is change the whole ecosystem. They would just rely on the custodians to use right now. That's probably why Bitcoin ETF has made quite a splash. So still a couple of regulatory sides need to happen to actually go into this direction. But yeah, it's just...
Thank you. I think our panel would not be completed if we do not say today is the first day of MiCA regulation as July 1. So Matthias, would you spread some light as you're looking for getting the full license on your exchange? How much does that impact here in Switzerland?
Yeah, happy to do so, Tanvi. Also, we certainly are of the opinion that regulated secondary marketplaces are a game changer to the industry. You know, it will really further accelerate the adoption of digital assets in the whole existing ecosystem, bank system. For that to happen, we of course see certain challenges still. The four main ones are: the regulation needs to be in place. Then there are technological aspects also, and then you need a cash leg solution, you know. And then also you need to have a certain readiness of market participants. When it comes to regulation in Switzerland and EU, you know, and globally in all of your countries, a lot of things are going on. Very noticeable is what happened in the EU and Switzerland 2-3 years ago was in Europe the regulator introduced new financial market categories of operators, and one is in Switzerland is a TLT trading facility. You know, you had the regular exchange, but then to settle a trade, you also required a CSD license, so as essential securities depository. Now we have a license here in Switzerland that covers both of these aspects. So under one license, you can both trade and settle. And in the EU, under the pilot regime, a very similar license category has been established. It's called a so-called TSS license. And this allows for much more efficient operation under one umbrella. And that is currently what we are pursuing here in Switzerland, is a DLT trading facility license. And I hope we are very, very close to obtaining it. But then, of course, sooner or later, when we transact more and more, there are also scalability issues. You know, central systems are not all that bad. The current system, I would say, when it comes to exchanges, is very super efficient. You know, we can allow for high frequency trading all over the place, so it's really efficient. But I see for scalability reasons and in the settlement space that there are still some hurdles to take, because we have chosen to operate on a public blockchain infrastructure. This, I would say, makes us unique. So we are a regulated exchange, but operating on public blockchain. Of course, that also leads us to certain challenges when it comes to the regulator. Regulators are not yet that comfortable with public blockchains, I would argue, because it's a new step. Usually it's a very controlled environment. Now you have the public blockchain world out there with all that innovation happening. But for us, it was clear that from the very start, we wanted to operate on public blockchain because there's so much innovation is going on, and we want to tap into that from a regulated market perspective. And then, of course, it would not make sense to start with an exchange because what we do is a transaction business, so people are buying and selling whatever assets we allow to be traded. And if you don't have a cash leg solution in place for digital assets, it would be quite meaningless to even start. That's why we experimented with 2 years ago already with major Swiss banks, UBS, Credit Suisse, Big Ten, Fontobel, and we proved that it's possible to transact on a public blockchain, transfer the asset, and at the same time bridge it for the cash leg into the current RTGS system of the National Bank. So we have a cash leg solution in place that is very highly scalable. It's very easy to adopt for the banks because it's already existing, what the banks normally do when they transact on a traditional stock exchange. So that's quite important. We know there are many projects going on with CBDCs globally, where national banks are experimenting with member banks on CBDCs. Stable coins there are more and more of stable coin providers in the euro. Also Swiss francs, we have a number of those. And in Germany, my colleagues are currently also working on a trigger solution with the Deutsche Bundesbank. So similar things we already did 2 years ago here in Switzerland, where the fiat is cleared into the target system. And then lastly, I want to also mention, of course, you need market participants need to be ready, If you build a perfect infrastructure with an exchange, custody, blockchain and everything, and market participants are not ready, then we have an issue too. Here in Switzerland, fortunately, many banks are now offering cryptocurrencies to their clients. And from an infrastructure perspective, already a lot has been achieved when it comes to further adoption to digital assets, tokenized securities, when you have infrastructure in place for cryptocurrencies.
Thank you. That puts us to the natural segue on scalability. So Björn, you representing DFINITY and working as a third generation platform provider, how do you think about scalability and the extent of technology today to be able to help scale Matthias and Jürgen in their efforts?
Yeah, I think we heard scalability is definitely an important aspect. And if you look at traditional blockchain projects like Bitcoin, Ethereum, etc., they're well known, but they face issue with respect to scalability, transaction speed, or the abilities to store data on it. So I think they're not powerful enough to really support infrastructure, for example, that will allow clearing. Now, that has led them to a new generation of blockchain projects, including the Internet Computer, which really focus on speed and scalability. And just to give you a number, if you would like to store 1 gigabyte of data on Ethereum, that costs you probably more than $10 million on Ethereum. But if you would do the same on the Internet Computer, you have to pay $5 a year. So that shows already that there's quite an advance, I would say, in achieving throughput and storage. But then on top of that, I think there's also the topic of interoperability. So I think many of these projects, and I would say maybe Internet Computer included, initially the focus on building a great blockchain, but then with growing adoption comes more and more the need to be able to interact with other blockchains, because not everything is really happening on one. And that's a key issue that I would say is now being worked on. Now, for the Internet Computer, there's one feature which I really like. It's the ability that a smart contract can hold natively tokens from other chains. For example, you can hold Bitcoin natively on the Internet Computer or Ethereum, or stable coins like USDC, for example. And that's quite cool because you can choose a token that you prefer, or which you're familiar. I mean, Bitcoin, for example, has a big name recognition, but then you can build a platform, for example, a trading platform on ICP that is fast and efficient and cheap, and still, sort of have the best of both worlds then.
Yeah. So I think we gather the fact that there are third generation blockchains coming in. We also hear a lot about the integration of AI into tokenization. I mean, that was previously a question for me, but I'm going to put it out to the panel here on what is it that is required for making smart contracts smarter, oracles to be a lot more efficient than they are today, in order to bring up the benefits of real world asset tokenization, because real world by itself means there's something happening off-chain. And the exact amount of data, the right representation of what's happening off-chain and on-chain is extremely important. So what have you seen in the market to help address that topic? Is DFINITY trying to do something in that space together with their partners? Have you seen anything in the exchange systems to be able to work more efficiently with smart contracts and oracles? Anything that's going on in this space, because that's a crucial element on bringing real-world assets on-chain.
Yeah, to be honest, what we have seen so far are rather stupid smart contracts. We are far away from achieving that efficiency. You know, in the traditional financial system, there are well over 50 types of corporate actions that instruments or issuers can undergo. And imagine you want to program at the end, you want to have that on-chain. Also, you have the asset interacts with oracles and data, then there are trigger events that the smart contract can digest and then execute new functions, because the real innovation happens when that programmability of the digital asset can really play out, you know. So with trigger events, triggering other smart contracts, you know, the whole ecosystem around that, and we have not even started to really innovate on that level. Also, as you mentioned, with the data needs to be on chain in order to do that. So far, the smart contracts more like referencing on existing documentation, term sheets, prospectuses. The smart contracts that we see are very lean when it comes to containing meaningful data and information, let alone the smart contract being really able, you know, to execute cash flows, to know about events and so on. Even the traditional financial system is quite manual still when it comes to corporate actions, and we just haven't seen it yet.
Maybe just doing first.
Go ahead.
Okay, no,
Go ahead.
thank you. Just to add to that, so you have obviously people say you can put it on the smart contract or on the blockchain, it gets liquid, right? That's not quite sustainable, because again, depending on what the issuance is, if it's native or if you have underlying asset, you need to kind of like, how do you bring the value of, you know, real estate on the blockchain actually? Because yes, you can trade it, but you won't get a market maker to trade anything if you don't know what happened to the underlying. So that's where I see one of the opportunities, actually bringing that information on chain. Also of ways of bringing the right information on chain, because difficulty is, and again, when we speak more in the regulatory space, is how much information do you have on the blockchain versus off chain? Because there's an implication on, well, costs if it's on the public side, but there's also implication of who can see which information, right? And that's kind of like still a bit like the stumbling blocks. So I would see from an AI perspective, execution of smart contracts definitely, but also what I would like to see is information of the real world assets being transferred in a way that you know, you can rely upon, like a net asset value of a mutual fund, for instance. How can you bring it on chain so that whatever is on chain is really, says what it does, so to speak.
Absolutely.
Yeah, and I would like to add that when talk about AI, when the way the intercomputer is positioned is a general purpose compute platform. I mean, that now operates on a blockchain. And so there's some nice demos out. I mean, please check it out if you go to X. There we have some nice demos on demonstrating how you can run AI on the Internet computer. For example, image recognition works quite well already. Sort of, I mean, like the classic example is you have like a sports car, and then like the AI tells you it's a sports car, etc. So it's a nice catchy example. But now if you link to maybe digital assets, I think there are obvious extensions now. So if you can do face recognition, then you can do also KYC on the blockchain. You can maybe use it for other cases in the compliance area where it's important to recognize patterns. Think about AML, for example. So I think that's the nice thing is like the computationally now it's now possible to run AI on chain, and now that means like there can a lot of nice use cases can be built on top of that.
Okay, thank you so much. The other big bottleneck that I have seen in my past working for UBS is the integration of this new market infrastructure with the traditional infrastructure till the time markets start growing and start using the new infrastructure. And that transition is always hard. So Matthias, from your perspective, how is it looking like for the traditional financial systems to be able to build this new infrastructure and integrate it well with the traditional setups?
The question addressed to me, Taurus, of course, has an important part to play as well there. On the side of the banks, as we are quite fortunate, as I mentioned, many of the traditional banks are now already adopted cryptocurrencies into their core banking systems. This is very notable because what that means is most banks in Switzerland, with the exception of one that I know, actually set it up like securities. When you have a cryptocurrency in a core banking system, it's set up like a security. And that means that from a processes perspective, the hurdle for the bank to integrate into the digital asset space is a lot of the work has already been done. And then, as I mentioned also, it's very crucial how you deal with the cash leg of a transaction, because if the bank needs to convert into a stable coin to actually delivery versus payment and execute the trade, that is not going to happen anytime soon, I tell you, because which stable coin is the right one to take for any currency. What banks absolutely don't want, any bank I ever spoke with, is any counterparty risk. This is always a big red flag for the bank. So we need to go step by step, and the more we can actually build a bridge to the current infrastructure, the easier it is. But then, what we also don't want is just replicate the current silo system with all these financial intermediaries, because what originally what blockchain promised to us was having less intermediaries, transact more efficiently and cheaper for end investors. And of course, we also always need to keep in mind that there is a way also to do everything, but with less intermediaries at the end. So we need to start to cutting out intermediaries one by one, and there is probably a future where the issuer grows much closer to the investor in the capital markets, also with less intermediaries. That is a future we should all be prepared.
And that's the future Dr. Augustin Carstens had set up for ourselves. If any one of you have read the Finternet case study from him. We just have to figure out ourselves of how long would that take to build that future.
And I think to Matthias' point, right, it's interesting to see, because obviously you start with blockchain technology and say, forget about everything you have learned in the past like 100+ years, right, on the traditional side, and like we do everything on a blockchain. And because of the nature of it, you can't really do it, because nobody gets comfortable if you say, okay, forget about it, we're doing this now. And everybody says, like, no, it's working, why should we? To your initial question about the two infrastructures, and that's what we see as well, enabling banks. The way of just replacing everything or trying, and sometimes you speak about interoperability. Obviously, blockchain is one, but systems, legacy systems, and the new one is another one. What we see more and more happening is running the two side by side. Because on the one side, you want to test it and you want to see how it scales, and you want to step by step bring more and more onto, let's say, the new world of the blockchain. That also helps educating people internally, educating the regulators, proving that it works, and that manage risks. That's what banks do as well. Manage tail risks, and if you don't know what that is, and that's kind of like the educational journey. So that we see probably for the ones that are most successful is working the best. Taking a business case, start to scale it. You can educate people internally, and also it's a bit like, don't go to the full bang approach of saying like, okay, we need to integrate everything with legacy systems. You're going to embark on a project that takes you 6, 12 months or more, costs you a lot of money. And if you cannot show the business that's behind it, it will get shut down. So kind of like one of the takeaways we have seen is keep costs low and then do it this way. But it will run side by side, I think.
Yeah, I think that brings into the point of some of the work we have started to do in my space, coming in very new, is the economics behind tokenomics, right? Because you can't just tokenize everything out there. I think all three of you have said that. But who is actually building the economies of scale, understanding what should be tokenized, what's the business out there, who are the market participants, and I think, Matthias, you mentioned, who is going to be coming and using this infrastructure? Where are the clients? Where are the customers? Where are the needs? So having worked on the technology side of things, building the business cases of things in my last roles, we identify this is a major challenge because we now have an infrastructure. We have third generation blockchains coming in and becoming more scalable, more powerful than ever before. We have the market infrastructure in place. We have the custodians in place. We have interest from the banks. We now have to build up an economy on people understanding how that benefits them. So on that note, Björn, give us an example of a case study, an actual business case study that you have worked on your platform. What were the opportunities and what were the challenges?
Yeah, so I mentioned in the intro that we have a DAO launch platform on the Internet Computer, and there are some of these projects that are linking to real-world assets, and so I think it's a good bridge to your question. So, for example, December last year we had a project called Gold DAO. That launched, and that was a project team that links physical gold to NFTs, so to make them liquid and easy tradable. But there's like an interesting twist now that the whole smart contracts and the data, everything that underpins that project is controlled now by a decentralized autonomous organization, which also has predefined tokenomics and predefined voting built in. And now I think your question was, okay, so how do you define the economics and how do you evolve there? So there actually it's not like a single institution, but rather all participants in that DAO jointly can decide on evolving the tokenomics and voting governance of this Gold DAO. And I think that's quite nice, because then you are not relying on a single person to tell on what to do, but rather sort of the users and owners of that platform also decide on how to evolve. And so what they plan to do now next, is they as part of this launch, they raised over $6 million now, and they plan to invest that now into developing a gold-backed stablecoin. Which again is a nice use case, sort of bridging real-world assets with something that you can also use then on-chain.
As Tracy said, we are happy to take questions offline, giving way to our next panel. Thank you.